also follow these people, Akshat Srivastav, Rachna Ranade, Finance with Sharan, Pranjal Kamra, then this will be news for you. All these very, very popular people. And everyone, not just in the Hindi, not just in metros, in fact, even in the Hindi heartland, even in, places in two-tier cities, they are hugely popular faces. Now, SEBI, what has it done? Securities and Exchange Board of India on the 27th of June approved the proposal to restrict the association of regulated entities with unregulated finfluencers. In simple Asan Bhasha mein, this means that registered entities like brokers, mutual funds, investment advisors can no longer associate with unregistered investment advisors, aka your finfluencers.
Now, why did they do this? The objective is very simple. They want to protect investors, people like you and me who might be even making our first investments online. The goal is to protect them from potentially misleading or biased advice that finfluencers might be providing. So the regulation is not on finfluencers themselves. It's very important to understand that. It's on anyone indulging in any kind of business with them. So intermediaries, basically. So we'll just bring you more context on this.
Yeah. So sample these pictures that are on your screen right now. An influencer would make a video, leave a link in the description for you to make an investment through that brokerage, or it could be any other fund. And what they do is their followers are then following them, they believe in them, and what happens is the influencers end up getting a cut out of it. Now, this entire transaction is going to be illegal and will lead to blacklisting from trading and heavy penalties. And the move is much needed, of course, keeping in amount the amount of misinformation vested interests are really, are throwing out and are peddled by influencers on social as well. There are so many of them out there, you can't really trust them all.
Right, and no one can take SEBI's guidelines lightly now. Remember how, and we'll just show our audiences this and we'll walk them through examples in the past. Sonal, if you want to just take the lead, our audiences will recognize Arshad Varsi there on their screens.
Yeah, the market regulator had banned about 45 influencers, including the Bollywood actor Arshad Varsi and his wife Maria from securities exchange cases. Remember, they had uploaded these YouTube videos and they spoke specifically about stocks of two companies, banned.
You also have action against the YouTuber Manish Mishra. He had recommendations to investors to buy company shares, inflating its price and later dumping it. This is a classic stock manipulation technique, and we're actually going to show you each of these people right now on your screens.
Yeah. The extremely popular Baap of Chart, I'm sure all of you must have heard of him, Mohammad Nasruddin Ansari. He was asked to deposit, just sort of soak that in, 17.2 crore in the account collected from carrying out these unregistered, fraudulent, illegal advisory service. He was also banned from accessing his security market altogether.
And one more example, SEBI actually barred the trading guru with over 1 million followers, PR Sundar, from the markets for a whole year. And they charged him, get this, 6.55 crore rupees for misleading people with unsolicited financial advice.
But not all influencers are bad, right? Influencers, on the other hand, also have a point to make. They are saying that, listen, we have democratized financial markets. India, remember, had only about 36 million trading accounts in 2019. Cut to now, 154. All these people need understanding of the market. They can't always afford an analyst or rely on financial knowledge, which can be complicated at times. And there comes in the influencer to help them out.
So this latest guideline set from SEBI, that's what we're going to be looking at. But what does it actually mean for influencers? And importantly, for you, the viewer, you're someone who might be following some of these accounts. Do you need to now be looking out for extra certification? That's what we'll take a look at today.
All right, and on that note, let's bring in our guest this morning. We've got Pranjal Kamra with us. He's one of India's most followed finfluencer, has about 6.12 million on the last count I checked, subscribers on YouTube. He describes himself your simple and honest finance teacher, and is one of the most respected people in the name. Also with me in the studio is Kalpesh Ashar. He's a registered RIA. So he's the kind of person who SEBI says, इनसे बात कर लो, Finfluencer की बात मत सुनो. ठीक है? So we'll talk to the one which SEBI says कि इनसे बात कर लो. So Kalpesh, thank you so much for joining us. My first question really is, nobody is doubting the fact that there was a need for something like this, but SEBI is essentially saying what? They're saying कि हम influencers को monitor नहीं कर सकते. There are just too many of them on social. So we are gonna hit them where it matters the most. We'll cut out all contact, all sort of arrangements, monetary arrangements that they have with entities. That means if they cannot, any mutual fund, any bank, any sort of scheme cannot tie up with a Finfluencer anymore.
Yeah, absolutely. And I think what SEBI has done here needs to be understood in the true concept and the true context, in fact. So this was much awaited. And I think we are waiting for this news for the last 1 year at least. And what SEBI has done here, Sonal, is that they have first of foremost, they've protected the investor. And that's what SEBI stands for, right? It's always investor interest. And how do they do that? They can control the people whom they regulate. And whom do they regulate? They regulate people like stockbrokers, the entire stock market. Then they regulate mutual funds. Then they regulate the PMS schemes. They regulate the AIFs. They regulate all the other, research analysts. So all those people who come under the ambit of SEBI, what SEBI says is that they cannot get associated with the unregistered Finfluencers. At times, sorry, I'm taking the liberty to call them misinfluencers. So this is what they're doing. They're saying that if you want advice, it's at your own peril from these people. But any of these entities whom SEBI regulates, they can, under any circumstances, no business with them. And they can say, okay, you cannot at all associate in any way with them. And if found, you're at your own risk, and we will be looking over you and, in fact, penalizing you.
Okay. Let's also go to Pranjal with a question. Pranjal, more than 6 million people follow you. These guidelines that we're taking a look at today, these have actually been in discussion, as Kalpesh just said, for about a year. We've known that they were coming, right? So can you tell us first what your reaction has been, the reaction in the Finfluencer community? Tell us more about that. But also tell us, the SEBI guidelines say there's a bit of a difference between advice and education. Do you agree? How do you see that?
Thankfully, sitting in Raipur, I am not in touch with fintech, Finfluencer community. That's the peril of being in a tier 2 city. But, so at Finology, we are also registered investment advisors. So as a Finfluencer and as a SEBI registered advisor, I really welcome these regulations because one, we need to understand why these regulations were framed in 2013 when there was nothing like Finfluencer. The purpose of these regulations was to actually regulate the prevalent mode of how advice is rendered. So back then, advice was rendered not through Finfluencers, but through traditional means that these regulations cover. Now, as the ecosystem has evolved, if the regulations don't in any way cover the primary mode of how financial information is doled out, which is through social media, then it's unfair on registered investment advisors, and also it defeats the purpose of the regulations. So whether you regulate Finfluencers through RIA, some other regulation, that's for SEBI to decide. But the primary mode of how people are learning or getting tips or advice needs to be regulated. Only then it's a fair system for all regulated entities. Secondly, until further clarity comes, because let's look what was there before this circular came. So even today, the regulation or the circular that has come, the brief part, it gives an exemption to people who are educating. So it specifically targets Finfluencers who have not been authorized by the board, which is SEBI, to actually dole out financial tips, purposely tips and advice without regulation. So it definitely protects investors. it also protects the interest of people who have decided to regulate themselves under SEBI and go through all the lengthy paperwork. So it's fair on the investor, it protects them, and it's also fair on other intermediaries who are taking that sort of heavy workload to stay compliant. So far, until further clarity emerges, in principle, it's very fair.
Yeah, yeah. No, you're right. It is quite fair, Pranjal. But and I also just want to highlight this for the viewers. Pranjal is one of the only few Finfluencers who's also an RIA, by the way. Huh? And I just want to tell people it is very difficult to become an RIA in this country because the regulations are very tight. There are just about 1,300 for a population as big as ours, like over 100 million, accounts, and only 1,300 people RIAs over here.
So that's what actually, is the thing which pinches the most, that the community of the RIAs is 1,300, or even in fact, I think lesser now. It's closer to 1,000 or 1,100. The people, the arduous task of getting themselves compliant, like what Pranjal said, is very, very tough. And then when you undergo that process, SEBI recognizes you, people recognize you, and then you find an entire open field of people who are unregulated, giving unsolicited advice for monetary gains.
It
I
hurts.
think that hurts the most. And people should now better understand that, this is not the right way to go about it. And SEBI has, I think, come down with a very heavy hammer on this.
Yeah, yeah. So, Toya, that's the point here, right? So, there is this whole demarcation, and you were also asking between registered and unregistered. Now, registering is so hard that only 1,300 people have managed, and unregistered is a full free-for-all platform. And that is why SEBI is saying that, boss, nothing doing, we will decide who gives advice, and over and above that, we will penalize people.
Tell us, let's go back to Pranjal and ask him this. Pranjal, for Finfluencers who have different income streams, right? There are a few different ways any Finfluencer is making money. How much does this actually end up affecting Finfluencers? And the RIA certification we're talking about in the first place, how does that make the advice you give different from the kind of advice you see a non-registered Finfluencer give? What are the biggest differences you've spotted?
Right. So the first part of your question, it's a substantial portion. So this brokerage or affiliate, mutual fund, advertisement, these, apart from courses, this is also a substantial portion. It can vary from person to person, but let me tell you, this is substantial. It will pinch anyone and everyone across the board. And before I come to the second part, I have one small question with bigger Finfluencers in general. That, you mentioned there are 1,300 registered RIAs, roughly 900 to 950 of them are active. Now, I can understand if someone young, fresh out of college doesn't want to get registered because he or she is sort of afraid of the compliance burden. But I don't understand when Finfluencers earning in crores and doling out advice to the nation in disguise of education, they are not willing to take that compliance burden. I don't understand. They can very well bear the financial cost, the operational cost. So it's on them to take the onus and come within the regulatory ambit. So I really think that the bigger ones should, and which is where last year big influencers was also defined in an advertisement regulation circle, where it was said that bigger influencers or Finfluencers are with a following of 1 million or more in a particular or any other social media platform. So it's them on whom the onus is to actually get registered, because yes, it's difficult to get registered, but there are certain advantages. Coming to the second part of your question, one is that it's not just that you are getting regulated so that SEBI can look over you. You are also getting regulated so that you are sort of protected in a way, even if you go wrong with your advice. So even the best investors, best advisors, out of 10, 5 of their advice doesn't do well. And then it is then that the regulation comes to your protection, that okay, this individual or this entity is registered, they have followed due process, they have done their risk profiling, here are all the documents, and hereby it was a rational decision when it was taken, although the result is not rational. So it even protects you to an extent from public backlash.
Okay.
Yeah, yeah. But Pranjal, can I ask you this then? So, effectively, because of this order now, all the videos that we now see on social, on this stock to buy, 10 stock to sort of in focus, or this is a good investment to make, all of these will now have to stop. There is no more stock-centric advice that can come out on social from anyone.
So I'm not really, I don't know how this will pan out because let's understand this, that nothing has changed apart from the fact that the onus, SEBI has shifted the onus from itself to brokers or other intermediaries. This was not allowed earlier as well. But the problem was brokers were not asked to be really diligent about it. So now all it has done is actually transferred the onus of sort of, cutting off ties on the brokers. Now, I don't know how well brokers can actually regulate it, constantly oversee. These brokers have thousands of partners, thousands of marketing partners, authorized persons. So I don't know how effectively this will be done. And to me, the only thing that has changed is onus is now on brokers. Otherwise, this was illegal earlier, this is illegal now.
Okay, let's just, I just want to quickly go to Kalpesh and ask him, Kalpesh, we're talking about the Registered Investment Advisor certification process. Just quickly tell us, because one of the things we've talked about is the fact that there are so few in the country compared to the larger population. We also know it's a very tricky process, and there's been this big question of whether or not this is gatekeeping the entire industry, the advice you can give people. I just want to ask you, how difficult was it to get that certification?
No, so for individually speaking, for me, I've been in this for last 10 years now. But anybody new who wants to venture to become an RIA, I can throw light on that, and what we also have to do day in, day out to stay compliant. And I think it comes with its, lots of, I think, pros rather than cons. Because you, first of all, being the SEBI compliant entity, self-regulate yourself a lot. The most important thing is that the conflict of interest is completely avoided. I think that's what Pranjal is trying to say here, that the conflict of interest is completely avoided between advisory and any distribution of a product. Second is, I think what puts a lot of people away from it, that we have to undergo examinations every 3 years. So we have an NISM 10A, 10B examination. There are certain post-graduation requirements which have to be fulfilled. And SEBI continuously audits us like half yearly on our books of accounts. Our payment mechanisms have to be shown. So everything is transparent. How many clients do you have? What is the revenue you earn from them? So you've decided to be that you are passionate about giving advice and you want to do it in a very systematic way. Yeah. I think that's what, over a period of time, I think even the 900 or 1,000 who've survived is because they've been very passionate about what they do. Nothing taking away from all the other people. So I have nothing against MFDs, nothing against research analysts who do their work ethically. It's all about ethics, and SEBI wants investor interest first. And people are realizing that. It is that huge population which is on social media or which is on the digital world, which is being taken for a ride.
Yeah. So SEBI is saying, listen, buyer beware. We are going to regulate, we are going to tell people that this is not allowed, and the rest we will take hard action, from banning to basic penalties. There is a lot of stuff. You can't take SEBI lightly at all in this country. Thank you both, Kalpesh and Pranjal, for sharing your perspective on this story. Just the start. We'll see this story actually evolve.